Hello and welcome to another. Let's try again. Third time's the charm. Yeah. Hello and welcome to another episode of Daily Market Mastery with me, Rauchenwald, on this really crappy Wednesday. I hope you all had a great week so far. Before we jump into it, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And besides that, all the tools that I'm using, so the charting software, the broker, the strategy I'm following, and everything else is linked in the video description down below if you want to check it out for yourselves. And the one thing that I always recommend, if you haven't done so, is follow the link in the video description down below. Talking is very hard right now. So you can check out the Elliott Wave principle, which you can read online for free when you're using that link, or order yourself a physical copy like I did. There, my bookmark fell out. Let's put that back in. And yeah, with that, we're good to go. So I'm gonna switch, let's switch here to, so see, God, really hard today. I have to say I'm having a slight headache. We're having a huge red day, or starting hugely red into the day, mostly because of GameStop. GameStop released their earnings yesterday, and while they beat the estimates in terms of earnings per share, they fell short as far as revenue goes. However, they still reported a profitable quarter. Now, if we focus on that now we can see the dump here. That brings up two distinct options. So during the last couple of days, I mentioned that we should finish the fifth wave here. So we're gonna focus on this area right now for a second. So I'm gonna zoom in even to an hourly chart, I guess. Yeah. Now I have to admit, actually it played out like that. It's just that a fifth wave here was relatively short. So we have on one hand a 5-wave impulse up here, then we have an ABC corrective pattern down here, and then we can see we have another 5-wave impulse, which actually brings up a small challenge here. We'll talk about it in a second. 1, 2, 3 reaches the 261.8 extension almost on the dot, I guess. Yeah, on the dot, so 25.02. 4, and then wave 5. So we basically have here actually a 3-wave corrective pattern. So 5 waves, 3 waves, 5 waves for a 3-wave corrective pattern. And we can get rid of this one here for now. And that actually might be quite a bummer. We also reached the minimum target for an ABC pattern here, which means if we zoom back out again, I think we were on an 8-hour chart. No, we were on a 4-hour chart. If we zoom back out again, this does not make too much sense right now, because either my labeling is wrong and this is not 5 waves, 3 waves, 5 waves, although it follows all the rules and it looks like a perfect ABC pattern. And it should be more something like, I don't know, 1, 2, 3, 4, 5. So basically this is not a full 5-wave move, but it's only the first 3, 4, and 5, which I consider very, very unlikely from the look and feel of it. In which case we only would have to worry if we break below 1979, because from that point forward we would potentially, or have the potential to, or not only the potential, but should go lower. However, if this here is a 3-wave move as an ABC, then that whole thing here needs to be a corrective pattern, which brings us back to what I've been saying for the last couple of weeks, that there is the distinct possibility. So again, it's really hard to label this corrective pattern, at least for me, but there is the distinct possibility that this is some corrective pattern that is similar to A, B, and wave C, and we still haven't seen the minimum target for that wave C. And with the assumption that this might be in some form, I don't know, I thought it might be 1, 2, 3, 4, and 5, but it might actually be another big A, B, and now we get wave C, which means that whole, yeah, it's like a weird correction. I'm really having trouble labeling this correction. I'm going to be honest about that. But from the looks of it, I think, considering how nicely this pattern here developed and how nicely it finished as a basically 5-wave, 3-wave, 5-wave move, I think we're going to see the 90.79 break. And once that happens, I'd assume that what we're looking at might be some free wave pattern that, so we can get rid of this for now. We can also get, that similar, no, the channel we can still use. So a free wave pattern that's similar to this. In which case, again, the 100% extension would, 100% is almost, it's too far. No, 100% is here, so the zoom changed it, yeah. So the 100% extension level for this would overlap with the 78.6 retracement level. So I actually expect, probably when the market open, or it's already open, yeah. So I actually expect, that's a drastic and quick change, to be fair. Like yesterday, based just on, if we zoom in again, based just on how nice this pattern behaves, I actually thought there is really, or it's more likely that we are in the bullish pattern now and we'll see the bigger 5-wave move up. But seeing how perfect this here behaves as a 3-wave pattern, I actually am back to, it sucks a little bit to have that back and forth, but I now think it's more likely that we actually see the pattern play out with another push down into the $15 area, which would then be the point of 78.6 retracement, end of wave 4, and then followed by upwards movement. Now for my positions, I mean, obviously for the shares I'm holding, that's brutal because it means having an unrealized loss, that makes the portfolio performance look horrible in the meantime. For my options, it means it's, at least for this week, nice because we get to realize the whole premium. I could even already roll them down. We're gonna consider that real quick. So if I buy back, so what do we have here? We have the $30 and we have the $35, and we have 3 of the $30 and up, and 2 of the $35, and we could already roll them down to as low as, I mean, 24 would be where we like in quotes break even, but give back shares for another $60 to realize this week. The moment we break the 1950, it was 19, so like here, what was the low here? 1979, so 1979, because that already looks like 1, 2, 3, 4, maybe 4 or 5. So the moment we break the 1979 would be the moment where we could actually, we could even go lower, but it risks actually realizing a loss. So if I'm wrong, it risks realizing a loss. If I go here for the $20 strike price, we can see that I could actually get $500 credit for that. Although I risk realizing selling for $2,000 less. What if my whole assumption is wrong? So what if my whole assumption that this here is basically 1, 2, 3, 4, 5? What if this is 5 waves and this is a very big A, B? Although there it also looks 1, 2, 3, 4, 5. So, but if this were a very big corrective pattern, then where would be our target areas for that? So the low here. Same thing. Yeah. So even then, the 100% target would be at the $15 mark. And then we would basically have A, B, and that would be wave C. And that wave C also then subdivides in this case into A, B, C, and that also into A, B, C. And then we have a set. So if we zoom in a little bit further, we have it set then that forecasted area here. So once we break the now I'm not gonna go greedy here, so we're gonna just, I don't know how low do I want to go. Yeah, so I mean, selling that $20 strike price obviously would net us $500 premium, but we would have the reasonable risk. Yeah, and we see as the price drops towards the limit in quotes, so towards the 19 mark, the payout gets reduced. But Yeah, so it would have the benefit of giving us $500 in premium, which is not little for basically, what's it, 2 days, yeah? Yeah. But if we finish above 20 by the end of the week, I'll have 500 shares called away at an effectively basically $2,000 loss plus actually more. Actually, it's a $5,000 loss. So $3,000 in premiums that I give back that I received from the put options that got me the shares in the first place, plus that. So greed is not the solution here. So the lowest, we'll actually have to change that for next week. Yeah. So if we change that for next week and for the $30 strike price, yeah, then it's $50. Doesn't make sense at all. Yeah. So I don't know. I think maybe we wait. I mean, here there's like $20 more in profit that I haven't realized yet. Yeah. It's a tough decision. Yeah. So like. As for the pattern, it doesn't make too much sense. I think, if I recall it correctly, GameStop also announced that they're going to have another share offering. And in the past 2 cases, they did that really, really quickly. So it's possible they also started doing that already. And therefore, their share offering is partially responsible for the current move. Yeah. Now, as far as the pattern goes, it would theoretically still be possible for this to be 1, 2, 1, 2. No, here it's not possible anymore. Here we have. Yeah, I would have to be wrong. This would not be 1, 2, somehow 3, 4, 5, but this would need to be 1, 2, 3, 4. That doesn't really work out quite nice. I mean, possible 5, and even then, I mean, the moment we break below the 1979. I don't have to worry about that anymore. If we crack the 1979, then we definitely, yeah, I mean, what other option would then there be? Then there would be the option that somehow this is 1, 2, 3. No, also not. Yeah. Considering all of this, I actually think that, yeah, we're looking at some kind of corrective pattern that subdivides as 3 waves, 3 waves, 3 waves. So cannot be a flat, because a flat would make a new low here first. Yeah. So I'm really struggling with identifying the exact kind of pattern that we have here. But from the looks of it, it's a corrective pattern, which means it corrects the current movement. Yeah, we even see we bounce pretty much on the 61.8 retracement here. So we should indeed have more downside to come here. If we will indeed reach the, zooming out, the $15 area, remains to be seen, although no matter if I label it like this or like we had it before, the $15 area is exactly the 78.6 retracement and overlaps with the expansion target area. So I think that's where we're going. How fast? Obviously, as we can see, we're now on a daily chart, so we can drag out a little bit for a couple of weeks for us to get there. Could also be a relatively fast movement, but I think, yeah, like I have to adjust my approach here. Yeah. So, but what's the best play for me? So I mean, first of all, I have definitely to wait for a break of the 1979. Yeah, although I don't really believe that this is some kind of 1, 2, 3, 4, 5. There is this option, and this would make this still a valid correction. But if it's 5 waves, 3 waves, 5 waves, then this is a corrective pattern, and we're now in an impulsive pattern downwards. So, God, yeah, if it were easier sometimes. I honestly don't think that a $15 price target makes much sense, considering that the cash on hand the company has already brings them at $9 per share. So that should already be the, I don't know, like, yeah, and that's just the cash. That's not considering brand value or anything. Yeah. It's gonna be tricky, but yeah, as said, so we'll have to wait for the break. And then what do I do when we break there? When we break there, this is a corrective pattern, and we're going further down, which means I should then sell calls or write calls for as low as I dare to do it, which means the best I can do would be the $24, yeah, which would give me an astonishing $155 in premium. I do it for next week, and if I do it for this week, it brings me an astonishing $44 in premium, which is really not worth it. Yeah, so it's not worth for the risk to have the shares called away at, I mean, the 30 I can go for, yeah, but the 30, yeah, they just even out. We already have the 30 calls. So basically, and I for the 35 I actually have two. So I'd have to actually do it like this, and then we're doing it for $15. And that's just, I don't know, minus the commission of buying and buy, so writing the option and then later buying it back. That just seems like a bad call. I mean, of course, those $15 also add up over long. So long term, I'm of the same mind that long term we might finish a correction down here, but then we get our bullish pattern up. But short term, yeah. 1 second. Okay, thought I had to sneeze, didn't have to sneeze. Maybe the sneeze comes then when I don't manage to mute the mic. Yeah, it's like so annoying. Where do you? Oh yeah, let's check the other way around. So if we check here, yeah, I mean we can see 1, 2, 3, 4, and now we have wave 5, and that wave 5 should take us actually probably still a little further. So if that's 3, 4, maybe here, yeah, then we see our wave 5 target would already be at 19, the minimum target, and the maximum target at 17, yeah. So yeah, like that's really a bummer. So yeah, what are we gonna do? I'm gonna set an alert 1979. So we at least get notified when or if that happens. Yeah, so I think it will. We probably might even see it during the stream. From the looks of it, we are now in, as said, the movement that should take us. Yeah, that would be. I mean, it doesn't have to go that far, but that would be where we have multiple different projections that point towards this area. So $15 seems to be where it's going, which means a lot of people this week will be burned with their call options. But yeah, it is what it is. Now, moving on, let's jump into Novavax. Yesterday, Olga mentioned that he thinks there is a correlation between the movement. I said I didn't see it, especially long term, or I see some related movement in the recent couple of months or in specific areas or timeframes, but not over the overall or through the overall chart. Now, obviously, there's no related movement today because GameStop released their earnings, and that's the, yeah, at least that's what people say is the catalyst for the movement, whereas Novavax didn't release any earnings. But yeah, so Novavax still relatively hot. It's possible, I mean, we need a little bit more push up here because otherwise it might be possible that we're actually currently developing a triangle here. It just starts to look very triangle-ish, yeah? So that would be wave A, B, C, D, E. And E would often, but if that's a triangle, then we would actually get a push down. Yeah, so and in this case, we would expect that we actually also reach roughly here, even a bit higher, and then bounce from there. Yeah, so far, I still think it's most likely end of the correction. 1, 2, 1, 2. I have to keep an eye on that, but there my risk is only $95, so it's not that it mattered much, too much, yeah. But I think Novavax still holds the bullish pattern. But again, from the looks of it, this may be actually it would be vice versa. That would be wave X, and then we would have tools, which makes so it actually would be bullish still. So because then a triangle would always be the last pattern in a correction, and it would behave like this, yeah. So although B would need to be there, which means D wouldn't be finished yet, and then E would be somewhere here. Probably touch that channel again, and then from there we would get our push up. So if we connect two, we'll actually add some lines there on the chart. Yeah, so if we connect that one with is that on the, yeah, okay, it's on the candle. So with this one, and then we connect this one. Yeah.
Order filled.
So one of our options got called or bought back for $1. So the 35 call options. So which means we can write 2 more calls if we want to. Yeah, no point in doing it for this week, and for next week the premiums are relatively low right now. So however, if I'm right and we go further down, then the premiums will just get lower. So it's like really a tricky choice. Maybe we skip a week of options earning just to wait out how the pattern plays out, and when there is an upwards move, premiums become higher and we can sell them or write them again. Anyway, so for the Novavax, it's possible that we are currently experiencing the last part of the corrective pattern, which would be, or which could be, a triangle in the making, in which case we would expect to reach that line here roughly, then bounce again, bounce roughly till here, and then from there go up. So either way, our, yeah, the labeling should still hold up. Yeah, moving on, Barnes & Noble Educational, there we have to, yeah, zoom in, 8 hours or less, yeah. Correction reached the 38.2 level. Unfortunately, it's really hard to label this. It looks, or it could be one A, B, C. And since we hit the 38.2 level, it could be the end of the corrective pattern, but it could also not yet be. We're still in the area where we where we consider we are reasonably correcting this movement here. The lowest one we would expect would potentially be the 61.8 retracement level before we go further up. We're just going to wait it out. There is no point, in my opinion, to make any moves in that current uncertainty of like, is that already the correction or not? Moving on, grab, yeah, still grabbing sideways. But there we are waiting for 26 anyway, so a lot of room for it to take off. Yeah, immersion, still around the 61.8 retracement level. Again, we're waiting. It would be the perfect level for the breakout for the potential 5th wave. Considering how that aligns nicely here, but we'll have to wait and see in which, if we're right here and we actually will see the next wave develop from here or not. No, still around 28 cents. So also not much movement, still waiting for, yeah, if we get a chart, but still basically, I mean, here we're looking at the weekly chart anyway, so it's going to take months for us to see it on the chart. But again, here I'm anyway expecting a break to the bottom in the future. Okay, we don't get the chart. Moving on, cost. Yeah, like there we're getting in an area where we also might have to worry. The point where we have to worry is here at 652. Although it would still be tricky because it looks to the naked eye like we have a free wave movement here, which would indicate that it's a corrective move, which would make us expect that we'll get a bullish pattern from here, but it looks like today we're also here on the way down. If that's the case, the question would be, how the hell do we label this? Yeah, then I don't know. This looks like a 3-wave move and not a 5-wave move. So, but yeah, challenging. Really a few challenging charts today, to be honest. Maxim, we're still waiting for it to basically finish the last push down, or like what I think. I think we have wave 3 potentially here, 4, and then wave 5. Novavax we covered. SMCI. Yeah, showing signs that we indeed might have finished, as mentioned in yesterday's episode, the corrective wave for a big ABC with 5 waves down here. So for potential room up. Sun power, yeah, like, I mean, I don't know, in that area it's easy to move a lot of percentage, but our average is somewhere here, so that doesn't matter that much. Still waiting for some kind of positive news to get this corpse revived, although it's very, very unlikely, so I guess we'll just have to, at some point, write off the loss. And with that, we can actually, we can look at the Wheeler real estate, yeah. Olga shared it yesterday. So now we have something that looks like a nice ABC pattern developed here. I have to get my grasp here. How is this? 1, 2, ABC. Why do we have the expansion here on the chart? Because the thought was that we might not have. Oh no, the idea was that might be 1, 2, 3, 4, 5. So in which case that would be our target area just for the first corrective wave. What other option do we have? We have the option that this here, but there we went very low. So that this here is basically wave A, wave B, and we're right now seeing wave C. That would be the minimum target, and the maximum target would be here. So it'd still be midterm bearish to an expected correction here. SPY. Yeah, that would be, so we'll have to wait today. Probably we'll finish red, or might still finish red for something like 1, 2, and then the next, then tomorrow or on Friday we should maybe go. Yeah, there's our alert for GameStop. We're gonna circle back to that in a second. Maybe then go and develop wave 3, or it turns out we're wrong and we get a further push down, and Nasdaq probably is doing the same. Today is a stream of uncertainties, yeah. Nasdaq not as distinctive in the downwards move here, so yeah, but Nasdaq also has the chance that this is 1, 2, 3, 4, and we're 5. We'll need a couple more days to see if that's indeed true, or if we get another push down and we are wrong here in that. Now, if we circle back to GameStop, so we broke the level here. Yeah, hourly chart. So if we delete that line now, so we broke that level here, which means we made a low, which means we're pretty much in bearish territory now, in quotes, so at least short term, because we have to consider now that this cannot be 1, 2, 3 or whatever, because we went lower here, and that would not be allowed. So so that's violating the rules, which means most likely this is some big corrective pattern that somehow, while we see that the second part subdivides into ABC, it's hard to see what the first part subdivides into, but that brings us to, we have more room down. If we have more room down, then I don't know. I mean, it would be so tempting, but then again, I mean, like, yeah, like risk reward, yeah. So I mean, I could sell 2 of those, yeah. So for 2 days, basically realize $200 in premium. But if we then finish above 20, I'll have to take the hit here, because then the shares I paid 4,800 for, I would only get 4,000 back. Actually 4,200 if we consider the premium, and effectively, yeah. God, so tempting, yeah, but the time frame is the big factor. We only have 2 days left, and it already, on the hourly chart, we already finished a potential 1, 2, 3, 4, 5 move here, although the 5 target is a little bit lower still, yeah. Which means it will be followed by a corrective pattern that takes us up again. So I can go for the 24. It doesn't get us much. We still have a little bit risk there. So if we sell the 24 calls, 2 of them that expire this Friday, we still get some premium, $35 in that case. So that's what we're gonna do. Yeah. So we have. Oh no, that's for. There was an oversight here. did not want to sell them for next week. Buy back to 24. Yeah, it's a $1 loss now. Yeah, great. Oh, wait, I'm doing the wrong thing here. Like, what the fuck? So, yeah, no, great. So, cancel. Okay, what do we have now? We have two $24 calls. Yeah, what the fuck? Yeah, so that we sold. So we have to buy back two to close out this position. So if we buy back two at the mid price, September 2024 strike price call options, we close out this position. Okay, so now let's just, yeah, even if we lose a couple dollars on this trade, but let's close that out because that was a mistake. Yeah. So which means for this week, it's just not worth it because if we sell those two 24 strike price, we get like $10 or $20. Yeah. So although, and if I'm wrong and the pattern indeed goes the other way, then I'd risk basically having my shares called away. Although this looks like a five, like, I don't know, no, like, I mean, so like from the looks of it, we have 1, 2, 3, 4, 5. 5 hasn't reached the full target because likely that last movement here, if we zoom in even further, has only finished like 1, 2, is currently forming wave 3, then we get wave 4 and wave 5. So there's still room down, yeah. Now, which means that we will then get a corrective move up, and that will likely be this Friday as well, so that we on Friday finish maybe higher here a little bit. But then the next week would still require another 5-wave push down, actually more than that, but yeah. So writing options that are at around 20 for this week is a bad idea because there's a decent chance or a reasonable chance that we finish this move today or tomorrow, and then we'll actually go above 20 again. However, we should stay above 24. Then for this Friday, however, selling or writing $24 call options for a premium of $9 per option, it's like just for $18, it's just not worth it. Yeah. So it means we already pocketed parts of our earnings and we'll get those options also to expire worthless really, really soon, in my opinion. And we pocket those couple hundred for the week and are happy with that. For next week, there is no point in selling. I mean, theoretically, I could sell. The $30 would always be an option. Yeah. So if we sell the $30 call options, 2 pieces for next week, but it doesn't bring us much more. It's then instead of $18, it's $34 after commissions. So although if we drop further, I can then close them out. So we go for that. Yeah. So now it's $16. Okay. Let's just make them. So we have for next week the $30 call instead of the mistaken. Yeah. And then we can already set the buy order to buy them back for $1 each. Good till canceled. So buy back 2 call options, September 20th, 24, $30 call, submit. Yeah. So, and I also mistakenly canceled that order, so that we also still have to do buyback 3 call options. And in this case, it's also going to be for $1. So also good till canceled so that we get them called out or closed out. So we have September 13, $30 call option, 3 pieces, which are the ones we wrote here to buy them back once the premium is $1. And then we have the September 30 $30 call options for next week, 2 pieces that we can also buy back. Yeah, that kind of makes sense. We're buying them back for $1 because there is still the chance that somebody might actually exercise them, even though they are not in the money for whatever maniac reason. Although, yeah, like, yeah, would that hurt us or not? No, actually, it wouldn't hurt us, but I actually enjoy having the shares right now because I expect bullish movement in the not so distant future. Yeah. Anyway, yeah, it's been a confusing stream. We're not gonna go too much further today. Yeah, it's like today some of the patterns don't make sense. We got a huge surprise here with the GameStop movement that turned the prospective 1, 2 and wave 3, 1, 2, wave 3, 1, 2, 3, 4, 5 2, 3 pattern suddenly into, oh, this is a corrective pattern and we're going to go down further. Surprise, surprise, yeah. And we'll have to wait and see. As I mentioned already in multiple streams, even when we were back here, the target area would be $15 from what I see. We just have so many things that point towards that area, where this would turn out as a, at least, I don't know, understandable corrective pattern. I'm sure there are other people with more experience in Elliott Wave Theory that are capable of labeling this properly already. I'm doing the best I can here. And we'll just have to wait for it to play out like this, which means we would expect that we're currently finishing with 1, 2, 3, 4, 5. That will get us down here, and that should mark the end of this corrective madness here, which would mark us at the 78.6 retracement for this pattern, the 100% expansion level for this big ABC pattern, and then again for this movement here for ABC, also the 100% level. So we really have 3 different markings or forecasts that give us the same area here, and therefore I think this might be the most likely scenario, in which case, again, the options premiums that we are earning are lower, and the pending or unrealized loss that we have on that position will get bigger in the meantime, and it will look a little bit bad until it doesn't, so if I'm right, everything's going to turn out fine as so often, and otherwise, it might just mean that we earn a little less in premiums every week from writing GameStop call options. I'm personally surprised. I mean, technically the company is profitable. I know that the interest they earn on the huge cash reserves are partially responsible for that. So it's not just business related, but they are profitable, they are debt free, they have a lot of cash on hand and so on. So I don't think that their latest earnings were bad. And it's always surprising how GameStop so often after earnings takes a dive. Of course, if the company now sold another, I don't know how many shares they said they will sell or throw on the market, but if they now sold more shares directly, then they might be responsible for it, which still doesn't hurt that much because they are piling up more and more cash, which gives them more possibilities on one hand. And even as long as they don't use the cash, the interest that they get in bonds right now or treasury bills is still reasonably high to actually create revenue and basically money to work with from there. Of course, one has to consider inflation as well. But it takes a little bit of time for billions of dollars to really lose their effect due to inflation. So, anyway, we're going to call it a day here. I'm sorry if today's stream wasn't as organized and as certain as usual episodes, but it is what it is. Today the market or certain patterns just are not as clear as they usually are or sometimes are. I still hope you were able to take something away from this live stream. Again, don't forget to like, subscribe, enable notifications so you don't miss out on the next episode. And with that, I'm going to wish you a pleasant rest of the day and then see you all tomorrow around 5 minutes before market open for another episode of Daily Market Mastery. Till then,